This is Roger Balser of Balser Wealth Management. Welcome to our 2-Minute Tuesday for August 21st of 2013. Underneath the surface, the U.S. has been experiencing a revolution in oil production. Since the beginning of 2010, domestic oil production has risen over 37%. According to Bloomberg, just last month, oil production in the United States jumped to the highest level since January of 1992. The United States met 89% of its own energy needs in March, the highest since April of 1986. This chart of domestic oil production clearly supports their thoughts. Domestic oil production returned to a buy signal on March 13th of 2009 after being on a sell signal for more than 22 years. Production has risen by 40% since then and is at levels we have not seen since 1991. This discovery sent me looking for ideas in the domestic oil area. Today I'd like to share the results of my drilling quest. There are quite a few exchange-traded funds that provide coverage in this area, but one in particular stands out. The PowerShares Oil and Gas Services portfolio. The symbol is PXJ. PXJ is comprised of 30 stocks that assist in the production, processing, and distribution of oil and gas. Some of the more well-known stocks in the PXJ include Halliburton, Transocean Limited, and Baker Hughes Incorporated. Looking at the chart of PXJ, we find that PXJ has been trading in an overall positive trend since January 3rd of 2013. It rallied up to 24.5, pulled back, and is now on the verge of moving to a new 52-week high, which would occur at $25 a share. With an overall positive trend, PXJ can be considered for those seeking exposure in this area. The first sell signal from here would occur at 22. My drilling also uncovered another ETF to consider for investors looking to get exposure to fracking and other unconventional oil companies. The market vector's unconventional oil and gas ETF, symbol FRAC, F-R-A-K. It includes stocks involved in the coal bed methane, coal seam gas, shale oil, shale gas, tight natural gas, tight oil, and tight sands. According to the market vectors, these companies are poised to transform the global energy landscape and in areas with rapidly expanding M&A activity. Year to date, frac is up 16.48%, keeping pace with the broad market. The trend of frac has been positive since July of 2012. It may be okay to consider frac here. The first sign of trouble would occur at $24 a share, a double bottom sell signal, and a violation of the positive trend line. Remember that any of the securities mentioned in this video are not a recommendation to buy or sell, and they also do not represent specific recommendations of Balser Wealth Management. If you're relying on a video for investment advice, you're making a huge mistake. You should consult with your investment advisor before you make a decision to buy or sell any investment. If you do not have an investment advisor, I encourage you to contact Balser Wealth Management at 440-934-3114 or through our website at balserwealth.com. Make it a great week.